The S&P 500 is trying to break out through these recent all-time highs and still looking very strong on a long-term basis despite the recent choppiness that we've seen. This has actually been very impressive. If you take a look at stocks and think about the recent environment that we've been in, tariff concerns, inflation concerns, the market continues to push the envelope and is now trying to break to fresh all-time trading highs. Part of the reason here, of course, can be attributed to some of the really overall good earnings that we saw this season, with stocks putting up some really strong numbers. That is something at the end of the day that is very important if you're a stock index trader, is to understand that in the long term, stocks generally follow the performance of their earnings. And with companies doing quite well overall, it does look like the S&P 500 is trying to see if we can get a breakout here going. Now, I am a little bit cautious about this, as I've been talking about here in recent videos, simply because a lot of the data here recently has been a little bit mixed. This week we saw inflation data coming in higher than expected, core CPI and CPI both higher than what was forecasted. Same thing with the producer price index or wholesale price numbers. So this makes me a little cautionary, because this definitely decreases the possibility of an interest rate cut, which would be fine if growth was going crazy. But instead what we saw is retail sales missed here this morning. We also had GDP numbers come in light, and services PMI also missing recently as well. That, coupled with JOLTS job openings coming in light, the overall story here for stocks, in my opinion, from a macro setup, looks a little bit less attractive than it did a few weeks ago. And taking a look at the AAII Investor Sentiment Survey, stock market participants are feeling more bearish right now than they have in some time. Is this possibly a contrarian bullish signal, or is there more pain ahead for stocks? I mean, stocks have been pretty good recently, but market participants are still feeling very fearful and cautious, especially with all the talks of tariffs of inflation. Who can blame them? Those things at any moment could turn into larger market corrections. We could see 10% pullbacks, 15, 20% pullbacks in the context of this bull market. That would actually be very much a possibility with tariff concerns. In 2018, the last time Trump was president, during his control, we actually saw some really large sell-offs in markets when negotiations with China and their tariffs and the trade war stuff really soured. We saw a very sharp and ugly correction on the S&P 500, peak to trough. That was about a 21% pullback, which only happened in the course of like 100 days or so. It's really pretty aggressive. So while I'm not necessarily bearish on the market, I do remain cautious and would prefer to be a buyer after some sort of sell-off or a significant breakout on some new catalyst, like trade war concerns being lifted, or NVIDIA earnings becoming really, really strong, which come around the corner, by the way. We do have NVIDIA earnings coming up, or something that just gets the market a little bit more appeased. I mean, inflation data cooling could have done that, but we did not see that this week. Had you had a really soft inflation report, I do think that the stock market would have broken out through those highs. NASDAQ also tapping up against the 22,000 level, this all-time high being tested here recently, and we'll see how markets react here. I mean, if we can get some sort of breakout here, perhaps the NASDAQ, S&P, and Dow Jones can continue. A very similar chart is here on the the Dow Jones, which is pressing up against those all-time highs. But NASDAQ definitely leading the charge here recently, with technology stocks bouncing back a little recently. Gold is actually down here today, which is a rare sight these days. Gold seems to be up almost every single day, with minor pullbacks overall. I do remain very bullish on metals, though I do think gold could have a little bit more of a corrective sideways or even pullback period. I think that actually Kenzo said it best on stream today when he said gold looks fundamentally very bullish, but technically a little overbought. I think that's fair. That's why personally I actually went long silver instead, which is doing quite well today, giving back some of its gains, and I'm going to see how the candle closes today. If you get a candle closer that is, a really long wick on top, then I'm not going to move my stop loss. I'll just hold the trade. But if we do get a strong close, if we recapture this area and actually close, strong above the previous high here recently, then I'll probably look to lock in my stop loss more on this trade. But I do really still like the case for silver. A lot of volatility here. Same thing with metals. Again, silver probably being brought down alongside gold, but the overall story I still very much like. Chinese stocks leading to some of the metals boom, with, of course, the Chinese stock market up pretty substantially here on the day. Take a look at the HK50 up somewhere around 3% here today at one point, which drags metals higher, as the Chinese economy, a very manufacturing and export heavy economy, does typically require a lot of raw materials for their activity, right? So stronger demand for raw materials means metals can actually do quite well. That being said, gold is a little bit of a nuance item there because it is more more of a risk off kind of dynamic. And markets are a little bit not as afraid of tariffs recently after Trump kind of commented softly on tariffs yesterday. He basically said they're still coming, but there's, maybe a delay on when they actually will start to take place. And the market, given some time on tariffs, may react a lot more favorably and positively than if he just stamped down a big tariff on everyone right away, and it was very aggressive, right? If we had seen that, market kind of optimism would probably be even worse, and people would be really scared right now. But that fear taking out of the trade or coming out of the trade probably would mean gold moving lower. Whereas if there's tariff concerns, gold will continue to hold up. I actually still really like the gold story. And although I do think we could see some pullbacks, I still think those are buying opportunities until further notice. By the way, if you'd like to try out the Edge Finder and start using our sentiment and economic data tools, all of them can be found all inside of one browser-based software, the Edge Finder. And if you'd like to try it for 30 days, there's a link in the description down below. Please note that this trial is not free. It's a 30-day trial for $199, which gives you a chance to try out the software, and it gives us a chance to know that you're a legitimate buyer and that you really do just want a chance to try it out. In the past, we've had problems where people would just sign up with an email and then switch it out the next month, right? So free trials are not something that we offer simply because we wasted a lot of time and energy working with people who were never serious and just switching out for another free trial. So if you are serious, if you're a serious buyer of the tool, apply for a trial in the description down below. Russell continues to look really choppy on the index side of things. I'd be very curious to see if we can get some sort of breakout here to the upside, but I'm a little doubtful with the inflation data coming in hotter than expected. But that being said, some of the things that the Russell likes, for example, cooler interest rate yields, are something that the Russell typically likes. And speaking of interest rate yields, coming down here by 1.76% on the 10-year yield, down to 4.53 here this morning when I'm recording this. TLT, a position that I have currently open, is doing quite well, making a nice bounce back here. We had a big drop and then complete reversal, looking really solid now as yields drop on the tariff stuff, kind of relieving pressures about concerns there. I think that a lot of people are just very pent up on the idea like, oh, tariffs are going to cause massive inflation. But now that there seems to be less concerns around tariffs, TLT is bouncing back pretty sharply. And that lack of concerns right now about tariffs may also be part of the reason the dollar index is breaking to the downside, breaking key support right around 107.5. This chart definitely looks more bearish than it has in a while. I mean, look at this. For a long time, we had this beautiful uptrend. Now we've got momentum pointed to the downside with lower highs coming into this chart, and breaking support kind of solidifies this idea, in my opinion, that we may see the dollar index go back to test longer term key levels of support like the 106 area or the 104.5 level. So right now, momentum seems to be favoring the downside, which should also help my metals trade idea. We'll see how that plays out. Today's video is sponsored by 8cap, and if you're not trading with 8cap already and you're trading outside of the US, you might want to check them out. They actually offer for viewers of my channel to get a free copy of the Edge Finder. Basically, they buy it for you if you make a deposit of $10,000 or more onto their brokerage. If that's something that you're interested in, please use the first link in the description to chat directly with a member of our support team. They'd be happy to get you more information and set you up with that, or you can go to a1trading.com/8cap for more information.
When the market is consolidating, it's like the market is still trying to digest whatever that is happening before it takes or before it continue with a certain trend. And we see that on the fundamental side.
Yep.
If something's not really clear on the fundamental side, most likely we'll see that the chart is not actually going anywhere. You see,
Yep.
When everyone is happy that, oh, things are looking good, we will see the market going up. But if everyone is on panic mode, it's where we're going to see gold flying and maybe other stock just going around the same cycle or maybe even selling. And I like what I see on that heat map because it shows us that we have some mixed signals. Gold is going up. The stock is just playing around the same level. And it's like, what's really happening, you see?
Yeah, and Kenzo, I want to show you something else. You just because you started talking about sentiment there, I think this is really important to your point. Right now, we just recently had, this is the latest AAII Investor Sentiment Survey. This is a survey that shows how market participants, market traders are feeling about the stock market. This is specifically for S&P 500 and how people are feeling. This is very interesting. People right now are scared. 47.3% That is a
Wow.
recent high in terms of bearishness. So people reported on this survey saying they felt
Mm.
bearish about the markets at a very high rate. In fact,
Wow.
that is a multiple month low in terms of bullishness, or I'm sorry, in high in terms of bearishness, and bulls are a little bit scared too. So worth mentioning this because again, when you have this consolidation here recently and people are starting to feel bearish, I would actually say that this would be potentially a bullish indicator. Like when you have everybody
Mm.
scared, if you do get a breakout, perhaps there's a bit of a rush back into stocks. But it does just show you, if you're looking at this from a gold trader's perspective, there's a lot of fear here. That helps the story for gold. People are uncertain about what's happening there, and maybe they
Mm.
want to kind of run away from that fear by buying something like gold or defensive stocks, maybe the Dow Jones, maybe they want to move into something, maybe they're cash heavy. That's another way to read this chart, is that sentiment is somewhat concerned right now in the markets. This is
Mm.
also another very important tool. This is investor sentiment. We talk about economic data quite a bit here on our sessions, Kenzo, but we also of course have sentiment, right? The put to call ratio gives us some interesting stuff. When we look at S&P 500, people are getting a little bit more cautious. There's not as much of a demand for calls as there was over here, right? So when this chart gets very low, people are buying calls aggressively, and when it gets higher, people are buying more puts, or it's evenly distributed between extreme fear and extreme greed. So we're seeing somewhere in the middle right now for the put to call
Mm. Mm.
ratio on the options market. So lots of stuff to look at here. Sentiment is very important. It does seem like market participants are a little bit more on the nervous side here recently, Kenzo.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.